Okay, hey everybody. So I want to share with you something that blew my mind away, really amazing, and it has to do with refinancing your house, or if you wanted to buy a house, get a mortgage. There's a right and there's a wrong way to do it. And I didn't know this. If you're like me, you're just a regular person. I'm not a loan agent. If you're like me, you've probably, refinanced in the past year or 2 years, maybe even several times, or maybe you're just getting your home and you're not sure, which rate to pick. And of course, you want to pick the lowest rate. I mean, who wouldn't want to pick the lowest rate? Maybe some of you, you've even bought down on points. You've gone an even lower rate, by buying down, and now rates are even lower than they were before, and you're wondering, should I refinance again? I'm gonna have to pay more money and it's expensive, so what should I do? And so basically what I found out, you shouldn't settle just for any rate. You shouldn't settle for buying down your rate, and you shouldn't even settle for the no point, no cost type of tactic. The most important thing to know actually is that whatever rate you pick, there's going to be a credit associated with that rate. What that means is that some rates you'll have to pay for if you want that rate. Some rates the bank will actually pay you to take that rate. And when you find that out, when you understand that, you're going to really be able to maximize how much money you make from refinancing. And if your goal is to save, you're going to be able to save a lot more. If your goal is to even make money, you're going to be able to make more. But my goal is just to tell everyone, how to do this, and to make sure that my friends, my family don't spend more money than they need to. If you're really savvy and if you want to take this further, you might even be able to make a lot of money from this, because the government right now introduced QE3, quantitative easing, and I'll talk about that later in another video. But basically they're injecting money into the economy, and so banks are making money, so why shouldn't we be able to make money with what we have, which is our loans, which is our rates that we have. So what I found out is this. I went on Amerisave.com. This is available to everybody. It's public knowledge, rates, and yours might be a little bit different. But if you look at the rate and the payment, you'll see that a 2.875% rate has a payment of $19.79 for my particular mortgage. And if I wanted that rate, that's a very good rate for a 30-year fix. If I wanted that rate, I would have to pay $21,000 in lender fees and points. I'm not going to pay $21,000 to get that rate. But if you go down a little bit, if you look at the 3.5% rate, what they're saying there is that if I take the 3.5% rate, they're going to pay me $6,465. Is that bizarre? That is something that just blew my mind away. Now, what most people do is people talk to their lender. I want the rate at no point, no cost. And the lender says, sure, I'll give you this rate and we can do it at no point, no cost. What does that mean, no point, no cost? All that means is that the lender is taking you to a rate and giving you a credit, and hopefully that credit is more than your closing costs. So let's take the 3.375% rate, for example, and if you look at the lender fee and points, it's a negative $2,486, is that I get a credit of $2,486 if I take the 3.375% rate. So what does that mean? So this here is the credit toward my cost. The bank's going to pay me $2,400. My closing costs are $1,726. Essentially, I have a no point, no cost loan. This loan, if I were to take this loan, this 3.375 rate, the bank would actually pay me a total of $760 to take this rate. Okay, so now that's really good news. What does that mean? That means that I'm not taking the lowest rate. I'm not buying down my rate. I'm actually picking a rate that not only covers my closing costs, but is actually going to give me cash on top of my closing cost. $760. That's not bad. So now let's go even further. What if I took a different rate? What if I took the one below, the 3.5% rate? Now the bank is going to pay me $6,465. I will make $4,738 on top of my closing costs. Did you guys catch that? I'm going to refinance my home. I'm going to get a lower rate, but the bank is going to pay me $4,738 on top of my closing costs. So I'm not paying for my closing costs, right? Because the closing costs, let's say, are $1,700. I'm making $4,000 on top of that just for refinancing. That's the secret that I've learned, and there's more I'm going to teach you in my next video, because there's some restrictions. You can only actually make $2,000 on top of your closing costs, but there are ways to increase your closing costs to be able to cover more of your expenses. And we'll talk about that in our next video.